This is the 23rd installment to the series Build Your Business into an Asset of Value. Venture capitalists are professional investors, corporate entities that seek private equity investment opportunities with the objective of making a substantial capital gain over the medium term. In Chapter 20, I proposed that a better way of thinking about building the value of a business is to start the journey by identifying the type of buyer that is most likely to pay a good sum of money for the business. After identifying the ideal buyer, the business owner may then consider what business characteristics will attract the targeted buyer and embark on a mission to build the business into an attractive asset of value. I consider the nature of the business, the buyer, and what business characteristics will be most attractive to potential buyers. I propose 6 types of potential buyers: owner-operator, angel investors, venture capitalists, sell the business backward, forward, and sideways. In the previous chapters, I looked at owner-operators and angel investors as potential buyers, but in this chapter I consider venture capitalists. What distinguishes a venture capitalist from other potential buyers? What business characteristics is a venture capitalist looking for in a business? And what type of business is most suited for this type of transaction? The buyer, a venture capitalist. Just because it's parked in a garage does not make it a car. The term venture capitalist is bandied about very loosely by many self-promoting individuals. Venture capitalists are professional investors, usually corporate entities, often managers of a venture capital fund, managing capital on behalf of individual and institutional investors seeking exposure to private equity as an asset class. Venture capitalists seek investment opportunities in private businesses with the objective of making a substantial capital gain over the medium term, over 5 to 7 years. Venture capitalists begin with the end in mind, a clear path to exit. To dispose of the ownership stake in the business is a prerequisite to investing. But venture capitalists are by no means a homogeneous bunch. Some are generalists, whereas others specialize in specific business sectors. Business characteristics. Venture capitalists are aggressive investors, seeking opportunities from which a 4 to 5-fold gain may be secured over a 5 to 7 year term. The last thing venture capitalists want is a business with an organic, slow and steady growth strategy. What venture capitalists are looking for is a business seeking capital to fund an accelerated growth strategy, an opportunity to scale, to take a 5 million rand business to a 25 million rand business in 5 years. Venture capitalists want to identify a racehorse with a super jockey, a business, the horse that has the potential to win, and a management team, the jockeys of superior competency. Venture capitalists favor businesses in the early stages of development and avoid mature businesses where growth prospects start to flatten out. Similarly, venture capitalists favor businesses with products and services in the early stages of the product life cycle. The challenge. To secure venture capital, investors must be convinced that the current management team can deliver substantial growth by investing in facilities, machinery, or new technologies. Venture capitalists are looking for opportunities where the management team assume responsibility for delivering investment returns in line with their expectations. And this is where the involvement of venture capitalists become very invasive. Venture capitalists invest substantial amounts of capital and will likely become majority shareholders of the business. They will demand a say in major decisions, representation on the board of directors, and regular reporting. A business owner seeking venture capital must agree to their terms, including agreeing to the exit strategy that venture capitalists will insist on at inception of the agreement. The management team of the business will be under continuous pressure from the investors to deliver. The nature of the business. Fast and furious is what venture capitalists are interested in. A business with a clearly defined growth strategy, excellent management with a product or service in the early stages of the product life cycle, operating in a market with significant opportunities for growth. Venture capitalists currently favor industries including information technology, green energy, healthcare, education, and financial services. In conclusion, in my opinion, seeking venture capital is appropriate for a very small number of businesses. Few business owners will accept the invasive aspects of partnering with venture capitalists. But there have been spectacular successes where entrepreneurs made a lot of money. In the next chapter, I consider 3 exit strategies, namely, sell your business backward, forward, or sideways. Thank you for watching. To access the full series, visit Constructum Online Learning on YouTube or click on the link in the post.